The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon out near Cape Canaveral discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 19th Fantastic Friday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is truly what it's all about. So let's go look at one of our tools. This is the tool I call, if at first you don't succeed, try again. You know, it was coined by William Edward Hickson. Hickson, he lived from 1803 to 1852. He was a British writer, and the full proverb goes like this: "'Tis a lesson you should heed, try again. If at first you don't succeed, try again." Now, on Tom's show last night, he fielded a call from a tiger who was talking about a light bulb or a light bulb system, some type of source that could revolutionize the lighting business. And I don't know whether it will or not, but it reminded me of today's tool. You know, if at first you don't succeed, try again. Thomas Edison joint ventured with Joseph Swan, known as Ediswan, to patent and build the incandescent light bulb. It would have seemed that the end had been reached when it came to the light bulb invention, since the two successfully lit all the streets and buildings around the world. After all, what further use could there be for the electric light bulb? Turns out, folks, that it was only the beginning, because the world has found different uses for maybe ultraviolet, infrared, halogen, fluorescent, and on and on and on, including the system that the Tiger called about yesterday. In fact, back in 2000, as the new millennia was kicking in, I unveiled at Epcot Center a subsurface laser etching system that used red and green laser light to create subsurface fractures inside transparent materials. You've probably seen some of those pieces. Yeah, I brought all that stuff to the United States. Solid blocks of crystal that had 2- and 3-dimensional images inside that. In fact, at Epcot, we used to take pictures of photos, and we would recreate them inside solid blocks of crystal. It was all done using light sources out there. Folks, researchers continue to search for new and better ways to make use of the electric light bulb. In trading, we use candles to light our way on the charts. So many great uses of light. And each day here at TFNN, each of us share trading systems, patterns, techniques, and we hope that those turn light bulbs on for each of you traders and investors out there. If these are things that you struggle with, have no fear, because 'tis a lesson we should heed. Right? Which is that oftentimes we reach a high level of performance, achieve a breakthrough, or maybe attain a goal or an outcome only to rest on our laurels, and then it's time to do better. Maybe you're so very close to being able to have a breakthrough. Maybe that light bulb is just about to go off, so do not give up. Maybe it should be said another way. Success, folks, it is not a destination. It's a journey of learning and bettering ourselves on a continuous and ongoing basis, day after day. William Hickson, he's credited with If at first you don't succeed, try again. And since that is not the destination, in an effort to add my own little personal flair, I say shortly after you do succeed and the celebration is over, because you've got to celebrate, I say try again and turn on an even brighter light bulb out there. Let's go check out the markets. These are markets that'll never give up. Right now, we've got the Dow futures off about 36 points. ES mini trade out at 1677.75, off about 3 points. NASDAQ futures off 6, trading at 3,041. Russell 2000 down about a point or so, trading at 1044-ish. King dollar back 8 ticks. The currency market relatively stable out there for a Friday. We'll take a look at those charts. Goldilocks up $8 right now, trading out at $12.92. Silver flat. It's up 4 or 5 pennies at $19.44. No such thing as flat when it comes to light sweet crude. That's up $1.06 at $109.10, on its way to $114 out there. Ouch! Ouch, we haven't seen it at the pumps, but I imagine it will go ahead and follow through. A quick peek around the world out here. Over in Europe right now, the DAX is off 46 points. The FTSE down 38. A little bit of a mixed bag in Asia last night. Nikkei off 1.5%, down 218. Hang Seng, really flat, up 17 points. So not much of a move out there. 1.5% to the downside inside the Shanghai, off 32 points. So let's go check out these markets. Let's go see where it is that we are at as we speak here right now. Let's go switch over into the daily charts for the index futures out here and see what has been done. You know, the number we were talking about, the key May 22nd level, that was hit. It was most certainly hit yesterday. That high was 1685.75 inside the futures contract. You got up to a level of 1688.50. In fact, it was during the show as we were coming into the 11 o'clock hour where I said, okay, the market has moved into the extreme. In fact, I'll just go switch back over to the 30-minute chart. The market has reached the extreme overbought territory. Right here, if you're watching us on TigerTV, as we're coming into that 11 o'clock session out there. If you're listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. You can always catch the archive of the show on Channel 9. That way you'll be able to take a look at the charts. And as we were coming into the 11 o'clock time frame, the market had moved up. The futures had moved up to 1688.50. It got into the extreme overbought territory, utilizing that relative strength indicator out there. What did that mean? That meant that the market had to work that condition off. It just cannot continue to go on like that. It uses up energy. It's like running a race. It's like, picture yourself running a race. And yesterday, it was one of those 100-yard dash races out there. It wasn't the marathon, where maybe used up a little bit less energy. And so it ran that race. It got tired. It needed to work its way off, and it worked its way off just simply by traveling sideways. Then we had the news out there from Microsoft and Google. They are really having a little bit of trouble here. If we take a look at Microsoft right now, it's off 8%, down about $3, trading out at $32.50. Google right now is down. Where's Google on my chart here? Only down about 3%, so not too bad. It's off 25 points out there. AMD, American Advanced Micro Devices, they're off about 14% this morning. Let's see here. We got Baker Hughes down about 3%. Chipotle is up this morning. They're up 6%. That is running into the area where it had recently broke down. So we'll see whether or not, now we'll go back to the daily chart. So we have achieved, the first target out here, or could be more than just the first target, which was the May 22nd swing point inside both the S&P futures as well as the index. Let's switch over to the index. We'll take a look out there and see what the index has to offer. Yesterday, it closed just slightly above that 1687.18 mark. That was the May 22nd high, closing out at 1689.37. Look, today, folks, you get a close below 1681.05, and you'll have a bearish reversal signal out there after making a 100% move of a move. And it'll be the very first sign, the very first bearish sign that a top may be in. Could be a real serious top. So if you are long, you want to make sure that you are tightening up your stops now. Tighten up that belt. You've had some nice gains out there. And if you aren't short here just yet, just be patient. Just simply wait for the sign out here. Why? Because what we know that we've got down at the June 24th, June 23rd level is high volume. And that's where the market will head to right now. If you take a look at the S&P, it closed at 1689. You're talking about it being able to move all the way back down to the 1560. That's about 130, 140 points or so. So what you'd like to do, that's a nice move out there. You've got volume. What you'd like to have is a little bit more I won't call it certainty, maybe a little bit more probability that the market is ready to reverse out there, because it's still very early in the trading session out here. If we go take a look at the Dow futures, let's go switch back over to the futures contract, because it was really the Dow and the S&P that we were waiting for as far as tests of the swing points. As we take a look at the Dow also made it up to that swing point high in the futures contract. That was at 15,523 as the May 22nd high. Yesterday got up to a price level of 15,533, 10 points above it. Today, on the futures contract, if in fact you get a close below 15,431, you'll have a bearish reversal signal there. If we go take a look at the actual index out here on the Dow, let's go see. In fact, now the Dow, it actually closed over, or also I should say closed over. Did the Dow close over? Give me a moment here. Too many charts. Been up too early. You know, it is a British Open weekend, so the nice thing about that is that the golf comes on at 4 o'clock in the morning, or at least it did yesterday, and it did today as well, so you can't beat that. I've got to grab the right chart, not the index. I want the actual Dow. Where's the Dow? It's got to be there. It's right in front of me. So if we take a look at the Dow, 15,542.40. That was the number inside the Dow. It actually closed at 15,548. Today, you get a close below 15,465.91, and that'll be another indication of a top. Now, you know we've got volume down there at June 24th. And inside the Dow, what's going to be interesting, I didn't mean to do that, but what we're going to need to pay attention to here is really that trend line coming off of that November 16th area. So if you take a look, if you got your chart, take the November 16th low of that candle. That happens to be 12,471. Your next touch point out there, go ahead and make that the January 2nd low out at 13,104. We can see that in June 24th, as the market moved back down to that level, that acted as a support area. So that's really going to be the first area where if there is a pullback here, if there is a retracement, and there is one that is coming, the question is it starting today? Is it starting Monday? Is it starting Tuesday? The first key that's going to help us to understand just how deep any type of correction is going to be is whether or not this trend line gets broken out here, and that is in the Dow, so that'll be easy. The Dow is a weak link out here. The Dow says it can easily go back and try to bust it down. That means getting back to June 24th. That would mean right around 14,551. It's at 15,548, so you got about 1,000-point move to the downside, assuming that it can break that rising trend line. If we go over into the currency market here real quickly, let's go take a look at our favorite currency pair. No, it's not the queen. It's not the king. It is the Euro-Japanese yen. The Euro-Japanese yen, you know, we've had a target out here of the 132-ish range. That was the 0.786 Gartley sell pattern out here. This is going to be key for us to be watching. Why? Because the last two patterns were actually butterfly expansion patterns. But here we've got a Gartley sell. We don't have a bearish reversal signal, but if we do get one here today, everything is lined up for the markets to move south. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's take the next 4 or 5 minutes here and start taking a look at some of these stock charts here before the bell is open. Some of the big gainers and losers out here. Let's start off with Microsoft. It's trading down 8% right now. Down $2.84. Last trade just fired up at $32.60. If we take a look at the most recent swing point, it's at June 24th. So, you know, how the market is going to go back and test the June 24th level at some point in time here, whether it begins today, begins Monday, Tuesday, whenever, we're going to see the market move down and test that June 24th swing point level. Microsoft will give us some clues as to what may happen at June 24th. 56 million shares on June 24th. The low there is 32.57. Again, trading out right now at 32.59, 32.60 in the market. What it also has a little bit of support here. High volume bar, you know, we always say pay attention to where those high volume bars fall. They don't have to be swing points. You just want to understand where the bulls have come in, where there would be some logical places of support. That would be April 25th, 110 million shares at top, 32.84, low 31.54. If that area fails, you'll see Microsoft come all the way back down to the breakout to the gap, and that took place here on April 19th, 2013. So it's going to be key to watch how Microsoft trades out here. as an indication as to what the market is going to do. So it is right now trading back to a normal area. That's why you want to make sure that whatever equities you are in, go back and take a look at the stock chart and understand where the breakouts are. Make sure you understand where the high volume bars are, because if they are way down below and you're sitting in an equity, you want to make sure that you're either taking some profits, you're tightening up your stops, you're doing something, because should it ever fall out of bed, that's where price will fall back to. Now let's go take a look here at Google. We'll take a look at Google. Google's got a nice hammer candle out here that it's going to trade into this morning. I suspect it will trade into it. Google right now, last trade fired off at 886, just down 24 points. So not too bad considering in the after market last night. I think it was down about 40 points or so. That was the first indication. It's trading out at 886.40. Now the top of the June 6th area is 866. So that's another 20 points down. So it was yesterday in the pre-market where it traded down into that hammer candle. That hammer candle low is important to watch. That's 847.22. Why? Because if you're long, you're wrong when you break a hammer candle. And in the case of Google, if it breaks that hammer candle, what sticks out is the high volume bar. And where is it? Back at April 19th. That level 766 to 803.44 out here. So key will be watching where Google trades into, what the volume is. It does have good support, but if it breaks that hammer support, look out below. Now, let's go take a look at AMD, Advanced Micro Devices out here. Let's pull that stock chart. I believe I took a look at it earlier this morning, and this may be forming one heck of an island reversal candle formation out here. So this could be holy shnikes or something like that. If we take a look at AMD, had a nice sign of strength and a gap up on July 11th. The low of that session is 416. Right now, the last trade just fired off at 403. If that 403 ends up being, if it opens at 403, I don't know where this will open, but we do want to watch Advanced Micro Devices out here because it has a gap in between the session of July 10th and July 11th. If it opens up below 416, never trades up to that, you will have created an island reversal candle formation inside this equity. Where can this thing pull back to? Well, the last time it really broke out, it would take you all the way back to April 30th at about the 267 type area. So that would be a huge haircut. But if you get an island reversal, guess what? It is the most bearish signal candle, set of candles. It can be a 3-day candle. It can be a multi-configuration here, which is what we may have inside AMD. Don't know exactly how to open, but we will find out, in about a couple of moments here, in a couple of minutes. So that's on American Micro Device. Let's go take a look at something popping to the upside here. That would be Chipotle, I believe it is. Let me see. Yeah, that's up about 6% this morning. But Chipotle, all that it is doing, I believe, is just getting back to the area where it had originally broke down. CMG is the ticker symbol. You'd think it would be easy for me to see it here on my screen, and for some reason it's not, so I'm just going to go ahead and we'll type it in. CMG is the ticker symbol. And let's take a look. Now, Chipotle, what it did here, it came back yesterday into a breakout area, or 2 days ago. That was this little gap up here from July 3rd out there. That had 691,000 shares. It came back into that gap with 478,000 shares 2 days ago, yesterday, with 971,000 shares. It is going to open, or should open, right around the $376 mark. So it is going to, that's not going to take out its, I'm sorry, $399.50. It closed at $376. So it's going to go ahead and take out, or try to take out, the high here from July 9th. But if we pull this back real far, the bottom of the breakdown gap inside Chipotle is $396.98. Last trade just fired off at $399.50. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 36 points, trading out at 15,510. S&P down 3.5 at 1685. Composite down 25 at 35.85. Russell 2000 up 2.5. Google's down $27 right now. Apple up 95 cents. Microsoft down almost 10%, down 3.30. Intel off 22 ticks. Cisco up 12 pennies. Leading the charge, the upside, it is Chipotle Mexican Grill up $25, trading out at 401.86. Time Warner Cable up next, up $4.46, up about 3.5%. Cubist Pharmaceuticals, CBST, up $4 and change. Schlumberger, SLB, up $2.76. That's up 3.5%. We're going to have to check in on Schlumberger because we had ExxonMobil move up above a consolidation range in yesterday's trading. Skyworks Solutions up $1.77. Lexion Pharmaceuticals up $1.36. To the downside, Intuitive Surgical, brain salad surgery. Boy, what a psycho stock this is. ISRG, that's off $61 this morning. That's up 14.5%. Forget about Google. Only down 3% off $28. VF Corp down $4. Community Health Services off about $5. Aetna Health down $4. LinkedIn off $3.91. Microsoft down $3.40. Our call number is 877-927-6648. We do have that island reversal formation inside AMD. No, you wouldn't go short a stock like this. You'd be paying attention to it, though. It's only a $4 stock out here. So you now have the island reversal, so long as today it does not trade up to $4.16. Right now trading at $4.05, the high. So far today at $4.08. So setting up for a potential island reversal candle inside of AMD. Microsoft here so far. You do have volume coming out of it. Already 41 million shares in only 6 minutes of trading. It is below that June 24th swing point out there. And that June 24th swing point, by the way, only has 56 million shares. And it is already done today, 41 million shares. So now, when the reversal does begin, whether that is today or not, I say that Microsoft has given us the first indication that the June 24th lows will be blown away. What does that bring back into play? That brings back into play the 6-month unfavorable seasonal cycle that's in about the 1470 range inside the S&P 500 as a first target out there. Let's go take a look at Google. Still not too bad out here. You do have some volume out of the balloon, 1 million shares, but, it has not even traveled back into that hammer candle. Now, not a ton of volume back on June 6th out there, but we'll see how that level here gets handled. It does have some decent volume that it's trading into. But only 4 million shares, June 21st, June 24th. So Google will be another one to give us an idea of what's going to happen at that June 24th level. The top of that is 876.32. So far, the intra-session low, 878.03, but 1.1 million shares. So we've got some volume coming out of Google's balloon out there. Let's go take a look at some of these other stocks. Let's go take a look at Intuitive Surgical out here, ISRG. In a world of hurt, gapping down. I don't know how many gap downs this one has. Let's go see if there's an exhaustion gap anywhere in the offing here for Intuitive Surgical. Gap 2 I can see for sure. So this is just gap 2 of probably a third gap play on the way down. So far, the volume coming out of this one, 633,000 shares. Boy, take a look at this. This thing gap down here with big volume on July 9th. 5.5 million shares, just simply traveled sideways. No bounce out of this thing at all. So let's go put this on a longer-term chart and try to get an idea of where this thing may in fact be headed to. Man, is that a nasty-looking couple of weeks out here. So the swing points that it's trying to get into right now is just August 26th of 2011. But, what happens when you start to get volume like this? It ought to go back and move down towards that high-volume bar. And inside Intuitive Surgical, that takes you back to July 24th, 2009. 13 million shares. The price point high is $223. It's at $361 out there. So it has to break the swing point out here from the area of September 2nd of 2011. That low is 389. But with those wide-ranging bars, the volume like we have seen coming out of this, it should not have any problem, quite frankly, getting all the way back to that 223 area. That is Intuitive Surgical, especially if we have a market that is getting ready to crack here. And it's upcoming. I just don't know whether it's today just yet. We got to just simply pay attention. And one of the things we got to pay attention to is the New York Stock Exchange. So we'll go take a look at some of the indexes here momentarily. Right now you've got net declining issues of 737. New York Stock Exchange at the end of the day. So far the bulls actually still have control of the ball. Let me see here if I can find my spreadsheet here. Of course it's not open. I will open it, give you the number out here because I don't have it memorized. Today, if we see net declining issues of more than And that's going to take a big, huge down day for this to happen. 2,816 issues, more than 2,816, and there'll be an absolute fumble by the Bulls. And if you are long, that would not be an advisable thing, because the Bears will have taken control of the ball with more than 2,816. Now, if we take a look at really the number of issues here traded on the New York Stock Exchange, you've got about 20. They say about 3,000 issues, pretty close to 3,000 issues, so it's going to take a total flush out inside the New York Stock Exchange in order for that to take place. And not that it can't happen. In fact, let me go back to my spreadsheet. I'm not going to punch this up on the screen, but let me take a look at recently the large down days that we might have had out here. You know what I'll do? I'll do that during the next break. Let's just pay attention to some of the charts out here. So let's go take a look at what we have going on inside the ETF structures. So we'll start off by taking a look at whichever one pops up on my screen first. There we go. So let's look at the SPYs. What do we have take place here in the SPYs yesterday? The SPYs got up. They tested 169.07. That was the high from May 22nd, had 243 million shares, got up there yesterday, got up over it, closed below it on less than half the volume, 103 million shares, going against 243 out there. What you really need to see today is a close below yesterday's open, 168.31. That would be a bearish signal out here. If you don't get a close below 168.31, what you can expect is you can expect the markets to move higher into the end of the session on Monday out there. But we'll just have to see. It's a Friday, and, Fridays here, light volume pullbacks you also have to be concerned about, so volume is going to be very key today. But we did have a failure in the SPY at the swing point, at that crucial May 22nd swing point. What do we have happen inside the Russell 2000? A completion of a pattern. We've been identifying that 1.618 butterfly pattern. Finished it with a doji candle yesterday. So the Japanese have a saying is that you get a close lower than that doji. It is the leaves falling off the tree. In our markets with regard to candles, said price would be falling off of the tree as well. Well, this is a big tree out here to be paying attention to, because it's been the lead dog in the move north, and that is the IWM. So it has completed very close. We're going to say it completed the 1-to-1, A to B equals CD. Remember, we're always taking a look at these areas as ranges, and that range being 104.50 to 105.11. Actually got up yesterday to the level here of 104.59 out there, completing the 1.618 butterfly sell pattern. So a lower close today would be a confirmation. Volume, though, yesterday, 32 million shares. So we'll just have to see what kind of volume it is that we have coming out of the tanks today. Now, you can also see the IWM certainly in the over bought condition. So that means what? That means it has to be worked off out here. But we're going to be able to put all these things together. Let's take a look here at the Dow Diamonds. The Diamonds yesterday closing above May 22nd, doing it on light volume. So a close back below it today says what? False break topside. If we take a look here at at the Dow Diamonds, 155.14 was the number. 12 million shares. Volume, not too bad yesterday, but still, the bottom line, it was light on volume. Only 6.8 million shares. Got up to a high of 155.74. Closed out at 155.34. Right now, trade at 154.71 out there. Volume, 687,000 shares in only the first 13 minutes of trading. So we need to keep an eye on that. Now let's go take a look at the Qs out here. We take a look at the Qs. Okay, so this is interesting. The Qs now, then, of course, between brain salad surgery, intuitive surgical, Google, and so forth, what the Qs have now done is they've gotten back below May 22nd. They got above May 22nd. They did it on light volume. That volume was 59 million shares, came into it with 47 million shares, got above it, closed above it with 31 million shares on July 12th, stayed above that area on light volume, 19 million shares on July 15th, 31 million shares on the 16th, 24 on the 17th, and yesterday 36 million shares. So right now moving below. Now the key here in the Qs is going to be, in order for this pattern here to get bearish, it's going to need to close into the gap out here. And unfortunately there's a pretty sizable gap. And the gap I'm referring to is the July 10th to a July 11th gap out here. Now that gap has got some decent volume. 47 million shares there. So it's back below. It's inside the lower part of its range. But what this really needs to do, it really needs to prove to us that this is ready to break down out here. And that proof would be coming into this breakout area with more than 47 million shares. What has it done today? So far, it's done 7.6 million shares. Yeah, it certainly has the volume here coming out of the gate. What you want to see it do today is you want to see it close from a bearish standpoint, from a bull. Give you the bearish and the bullish. You know, if it tests 74.25 and holds that area, that's going to have to make you say, something to think about. If volume dissipates in the market and it gets down into test 74.25 and it closes back above it on light volume, says, oh boy, you got some support there. It can go ahead and make another run for the May 22nd high, maybe even back up to the high here from July 17th, a couple trading sessions ago. So it'll be important to watch what the Qs do in putting all of this stuff here in line with each other. Now let's go out to Nashua, New Hampshire. That's why I came up with natural gas, because something flashed on my screen, and we're going out to Lou. Lou, thanks for calling. Thanks for holding. How are you today?
Fine, you.
Excellent. Thanks for asking. You wanted to take a look at natural gas. Are you looking at going long, at short? How can I help you?
Well, I would like to get long somewhere.
All righty.
That's the thing to do.
You know, it's natural gas. It had a nice breakout session yesterday, and what it's doing here today, you know, it's been flirting. I wish that natural gas had not really broken this rising price channel out here. And there was a 0.78. There was a Gartley sell pattern, or I'm sorry, Gartley buy pattern that ended up failing out here. And that was the pattern that completed. It was 0.618 Gartley buy pattern that had failed here recently, back around June 25th. And so you had a nice breakout session here yesterday. You know, if you're looking for a trade, would you be trading the UNG? Tell me what you would be trading here.
It looks like the futures.
Futures, okay. You know, what you want to do is the candle from yesterday is nice. Here's how I would trade it. I would be paying attention to yesterday's candle. Today is having a little bit of an inside day. Maybe you get that for the next several days out here. And what I would do is if you get a close back above yesterday's close, which is 381, then I would go ahead and take a momentum trade out here. The other way to trade it is let it come all the way back down and test the lows of yesterday's bar. Let it do it on light volume. Then you got a decent reward to a risk trade out here. But I would either have the continuation move in this thing propel me into the trade. I would be happy to pay higher price for more information, because I don't have a clear read on this other than this read, which is yesterday's candle is very nice. Today you have a small bodied candle inside that. You get that for a couple days and then it closes above, and it's called the rising 3 candle, and then that would be a decent trade. A decent trade because what you would be taking a look at is a retracement back to at least probably the $4 area, 408 or so. So that's how I would trade natural gas. All right, at least as I see it right now today.
That sounds great. Thank you.
All righty. Thanks so much for calling. Let's take a look here at, let's see. Let's go take a look at some of the sectors now inside the S&P 500. So let's go see what we have going on inside here. I mentioned Schlumberger was up this morning. Schlumberger is up about 7%. And what's key here is if we go take a look, I'll just punch it up on the screen here right now. First, we'll put up ExxonMobil, and this is going to be important for us to be paying attention to. I pointed this out, I think it was last week, maybe early this week. ExxonMobil has been trading in a 1-year 7-point consolidation range. This is a better trade potentially than the natural gas trade, because this thing's got a 7-point trading range here that it broke out of. Broke out of it yesterday on light volume. That light volume that I'm benchmarking it against is the high of October 19th, 15 million shares. Yesterday broke out of that range on 10 million shares. So if, in fact, ExxonMobil comes back, test that level meaning right around the 93.67, can do it now on less than 15 million shares and then close higher, that is where the back would be up against the wall. That would be a continuation trade. And you could consider taking a long trade in ExxonMobil out there. And if it closed back inside the trading range, what would you do? That's right. You'd close out the long position, and you would go flip to the short side. So you might have to get jostled around here, but this is where your back is up against the wall. Like, I can't control the markets, but what we can control, is the patterns that are out here, the ones that are set up that give you the best, highest odds of probability of being able to take either side of the trade. When it comes to trading, you really shouldn't matter which way it is that you're trading. You're looking for the terminology, your back up against the wall, where it's going to break one way or the other. That's why on the natural gas trade, I look really at the continuation pattern out there that was in place. Well, the XLE, which is I think the fifth or sixth weighting structure in here, this broke that 0.786 Gartley sell pattern yesterday with some decent conviction. What does that say? It actually says the energy sector may want to go test that 83.95 level because this thing has not broken down. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Right now we've got the Dow's off 46, S&P is down 4, Composite down 31, Russell 2000 off 4. So we were taking a look at the energy sector here before we went to break, and I just erased it from my screen. Let me see if I can put it back up there. Is it up there? So if we take a look here in the inside the energy sector, the XLE, really the top 3 stocks, if you just simply were to pay attention to them, ExxonMobil, that's 17% of the XLE. Chevron, that is 15%, so now you're up to 33% out there. And then you've got Schlumberger at 7%. So you got 40% in essence of the energy sector, the XLE, the DUG, the DIG, ER, whatever it is, or what have you, is in 3 stocks. So all you had to do is, if you're trading those vehicles, you got to make sure that you're paying attention to those 3 stocks. So if we take a look at Schlumberger, because we just took a look at that, so Schlumberger is number 3 out there. ExxonMobil has broken above a 7-point 1-year sideways consolidation range. That says it's moved to the top. If it stays above that consolidation range, is 7 points higher. If we take a look at Schlumberger today, it's taking out its it's February 14th swing point. That's got 11 million shares. It's trading up into it right now with 4.5 million shares at 9:55, 25 minutes into the trading session. So it's attacking that swing point with volume. Even if it doesn't close over it, it's going to go test the highs here today. And if it does close over the price point of 81.56, says the energy sector here wants to still run higher. Now take a look at this. This is a sideways trading range. Forget about ExxonMobil's sideways trading range out here. This thing is trying to break out above its highs that it has not been able to do for quite some time. We'll take a look at this here. This takes us all the way back into the time frame. Let me just put the black line across the screen out here. So this takes us all the way back into the area of August of 2011. So here is a 2-year consolidation range that Schlumberger is trying to break out of. And that trading range, we're going to call it from $80. We'll call it $80. We'll use the conservative down to 66. So that's, what is that, 66, 76. So that's a 14-point trading range that it is trying to break out of. 14 points on top of 80 takes you to 94, takes you all the way back up to the highs from July of 2011. Now, the weighting structure of the XLE with inside the S&P 500, I don't remember, 5 or 6, something like that. It's not like the XLK and the XLF out here. But if we take a look at Chevron Mobile, take a look at the top 3. That right now is trading into its most recent swing point high from May 28th of 2013. 6.5 million shares. It's pushing in there with volume. Already today, 1.5 million shares. So assuming that this volume level here keeps up, yesterday was 4 million shares. It's tested the swing point. It's underneath it, but it's pushing that swing point with volume. That says that Chevron Mobile wants to go test the 127.40 level out there. So that's what's going on inside the energy sector by taking a look at what's really going on underneath the covers. Now, the XLK, the technology sector, that should be getting its butt whipped here this morning with what's going on with Google and all. So let's go see what a butt whipping looks like here and see if it really is. Right now, all that it is doing is coming back and testing that gap up we were talking about on the Qs, that July 10th. The July 10th high out here, 31.48, 8 million shares. Now on the way down this morning, so far, 2.3 million shares, almost created an island reversal inside the technology sector. I was looking at the July 11th low out there, which is 31.67, but the high today, so far, 31.69. So that is not taking place. But pay attention to the XLK, the volume that's coming out of it, and stay tuned for the Nadex Bull Bear Binary Option Hour. Daryl Martin and Tom O'Brien, they will be up next, folks. And if you're off to start your Friday, what I want you to do is have just simply a fantastic weekend. And I want you to remember this, and that is that you have an amazing power within yourself. And that power, it's so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. I look forward to seeing you Monday morning. Take care, folks. Nowhere spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.